A very beautiful morning to everyone here. Welcome once again to the Morning Market Review by Riley Trade. Um, my name is Victor, and I'm going to be your host today on this review. And as of now, I think we have very few persons. So others are about to join in. So let's just quickly, patiently wait for them, rather. The next few minutes, we are going to start. Let's say in the next 3 to 4 minutes max, we are going to kick off this review. So just for curiosity's sake, because I'm curious to know if my network is so good. I've been having issues lately. Please, if you can hear me, can you kindly type a yes on the chat box if you can hear me? That is loud and clear. If you can hear me, can you just type a yes on the chat box? Okay, thank you, Olariwaju. Thank you so much. All right, so let's quickly, or rather, let's just wait for those some other persons to join in this call before we kick off. Good morning and welcome once again, everyone. The audio is fine, the audio is good. We're just trying to wait for others to join in on the call before we officially kick off the review this morning. All right. So in the next 2 minutes, we are going to kick off. Next 2 minutes. All right, so let's quickly kick off the review. Good morning once again. Like I said, my name is Victor, and I'm going to be your host for this market review. So let's quickly dive in. Without further ado, others will join us on the call. So basically, our aim is to make money because that's what we are here to do. And we are here to make money via trading. But you see, this is a knowledge-based business. You need to have the technical know-how in order to make money in this market. All right. Please let me, so that I won't be talking to myself. If you can hear me now, please just signify by yes. If you can hear me, please just let me know so I can continue. I guess no one can hear me. Mhm. Or if you can see my screen, just let me know. Okay, loud and clear. Thank you so much. Thank you. All right. All right. So as I was saying, this is a knowledge-based market. Hence, you need to have be updated or be abreast with some of the latest happenings in the market. And it's kind of breaking. Oh, Idris, I must say. Okay, so there are different ways we can try to analyze the markets. For us to enter a market, you have to analyze to see the possible direction if price is going to rise or price is going to fall. So the rising price we want to buy and the falling price we want to sell. So where is price going for today? Where is price going for the week? Where is price going for the month? If some persons are that good, they can, predict things like that. So let us find out. Now, one of the ways we can find out is what are the things that move the markets? On a normal day, there are some constants such as demand and supply. The market, there are always people willing to buy. There are people in the market constantly there to buy, constantly there to sell. So that causes automatic demand and supply. Now, this demand and supply can vary based on the fact that sometimes the buyers can be more than the sellers, and another time the sellers can be way more than the buyers. So these activities or these numbers in the market tilt price in one direction. So if you have more buyers than sellers, price tend to move toward the direction of the buyers, and which is the upward movement. So there's a demand pressure on price. Hence, and on the other hand, if you have way more sellers than buyers in the market, you will see that there's a competition now and price automatically starts to fall because normally you wouldn't want to buy. Everyone wants to sell. So sellers will have no choice than to dump price, reduce price, and price keep falling before buyers can buy it, right? So that is a constant. Now, there are some variables that comes in that sometimes affect this now, which we call the fundamentals. They don't happen every day, every hour. They happen, occasionally. So some can happen once a month, some can happen weekly, but at least it is not a constant, all right? Such as the demand and supply. Hence, we need to also know this because once they do, for the fact that they happen just once in a while, can move price massively, all right? Then hands off and allow the market forces to just take control until the next time comes to play. So for today, which is Wednesday, the 9th of October, basically, we've had around 2 a.m., we've had the NZD official rate, which is the equivalent of the FOMC we are going to be looking at today for the US. So we've had that, and they are keeping their rate constant, 4.75 percent, let's say 47.5% basis points. Then the statement also, now this statement is not a data news, it's not a data news, all right? So you need to follow the Reserve Bank of the Australian, okay, New Zealand, okay, yeah, um, RBNZ, that's the Reserve Bank of New Zealand for this particular update, okay? But the official rate remains the same as they were forecasting, So in that case, we might not see some significant change over time in the current strength of the New Zealand dollar, right? Now, but on the other hand, some of the major news we have again is we are going to be having crude oil inventories for the USD. Now, why did I skip all of this? Now, these news are low impact news. All of these ones with the yellow envelope. We are focused majorly on the red envelopes, which tells us this is a high impact news, all right? You can clearly see it's a high impact news, but these yellow ones are low impact news. So we don't really pay attention much to them. But these brown one are medium impact news. So at least it can move the market, and it's obviously crude oil inventory. So might be expecting it. Now we need a lesser figure. So said actual less than forecast is good for currency. We want to check the number of um, crude in the storage. If we have more, that means we are not demanding soon. But if we have less, means there's going to be demand soon. Okay. So we need a figure less than 2.0 for crude oil to rise, right? And lastly, we are considering the FOMC meeting minutes for today. It's a detailed meeting of Federal Open Market Committee, the Federal Reserve of America. Those guys are in charge of setting the interest rate. So they will have a meeting. So they are going to giving us the details of their meeting and telling us the reasons why they are possibly increasing interest rates or they are going to be reducing the interest rates. And that is for tonight by 7 p.m. Now, for tomorrow, that's where we are expecting the CPI, that's inflation data, which is a major one, okay? So these guys will set the pace, but obviously, the CPI for tomorrow is just the inflation data. They want to check if the inflation, rising prices is one of the ways, consumer rising price, one of the ways we check out for inflation, one of the major ways, right? So if prices are constantly rising, it means that the purchasing power, your purchasing power is reducing. For those who are in this country, you understand exactly what I'm talking about. Due to the high level of inflation, whatever value your currency is right now, it is dropping. You need more money to buy the same things you were buying last year, last 2 years, last 3 years. You need more money to buy them, all right? Now, so the strength or the purchasing power of your currency drops. Now, once that drops, if we have more inflation, what happens is that the CPI, all right, naturally, they would, the FOMC, for the next FOMC, they are going to increase the interest rate. So increasing interest rate will further strengthen the currency. It will bring back value to the currency, okay? It's just like trying to increasing interest rate, making it harder for people to borrow money, all right? So the currently available money in the economy, the strength improves automatically. It's like making something scarce, all right? The value automatically increases. So that is what the CPI is all about. So we need, if the dollar is dropping, we need a higher CPI in order to balance it out. We need a higher value. Yeah. On the contrary, yes, we need a higher value. So you are thinking, no, we need this one to rise. No, we need this CPI to go up for the dollar to gain strength. If we have higher values for the CPI, that's the consumer price index rather, sorry, I'm so sorry. I think I'm mixing it up. If the consumer price index, that's the inflation rate, is rising, then we obviously need our FOMC, the interest rate also to rise in order to bring back value to the currency. Okay. Now, whatever happens tomorrow is going to set the tone for the next FOMC. Okay. So what happened in the last CPI is what is sponsoring this FOMC meeting. So this one now is going to sponsor the next FOMC meeting. I don't know if you understand what I just said here. Okay. So these are the major fundamentals that we're expecting to do. So quickly, let's dive into our charts and look at the market. So let's start with the USD. So for those who remember, this has been our USD CHF, which has been in the range. NFP of Friday last week, obviously strengthened the dollar, and it came out of that range, but dollar has really not helped massively against the CHF. So You are seeing price dumped back again. But this level here is holding because obviously we have a change of structure. We have a change of structure here. So so we can view it clearly now. You can see that we have a change of structure. Let me refresh this. I'm trying to update my charts. Okay. So we are having a change of structure over here. Now, what do I mean by the change of structure? If you want to trade anything whatsoever, the first thing you need to know is your market structure, which tells the direction that price is currently moving towards at the moment. Now, as much as price moves, price does this a lot. You notice a series of, you see downward movement, then before then, you see it was going up, and before then, it was coming down. You know, price wouldn't just keep moving too much in one direction. Obviously, it will change direction again. Now, you can obviously see that price is moving up and down and up and down, alternating it. And for every time it goes up, at least for a few days, sometimes for a few weeks, it goes up. And there are times it goes down for a long period, also for days or possibly for weeks. You can see again, it goes up and down. Now, this obviously is market changing character or changing its structure inside a larger trend. What do I mean by the larger trend? The overall trend for USD CHF. I can use the highest time frame that I have, the last two highest time frame, which is the monthly and the weekly. All right, so you can see my monthly time frame is giving me a clear downward trend, and my weekly time frame also is giving me a clear downward trend. Let me do this again. You can see it's giving me more of a downward movement. Now, this is the overall general trend. It means that every time CHF tends to go down, there's a high probability that it goes down way more than it will go up. But we can be trading the ups and downs. We just need to know what price is doing at the moment. Now, your 4-hour time frame, and some persons can even try doing it on a 1-hour time frame. So this is my 4-hour time frame. And in the 4 hours, you can see how price has moved down. Now, currently price is ranging. And when price is doing that, price is trying to change its character or change its structure. The previous structure was a downward movement. So you understand what I'm trying to achieve here, right? Once we do this on 1 or 2 charts, then just copy and paste the same thing in your other charts. It will make you understand what I'm talking about clearly, right? So let me take my time to explain this now. So you can obviously see here, price was dumping, right? Now it means that we are going to be having series of higher highs and higher lows, right? We have, let me use this one. We have a high here, and then we had a low. We had a low, then market change again. It gave us a high and another low. Okay, so this is what we are going to be seeing: series of highs and lows, of highs and lows. Then we have another high and another low again. Okay, this one was massive. Another low again. Okay, so what we are going to be looking out for is when price is giving us series of higher highs, higher lows. I'm sorry, lower highs, lower low, lower highs, lower low, lower highs, lower low, lower highs, lower low. Now, it means that our market structure is towards the downside. Okay, I should zoom in. Okay, so our market structure is towards the downside. I'm sure you can see it clearly now. Okay, so a high is a low, a high, a low, a high, a low. And one of the things you also notice is that, you're welcome, Manuel. One of the things you also notice is that after price gets to a low and it goes to a high, we are expecting in future another low lower than the previous low. So at some point, this low needs to be taken out to give us a new low and a high. Now, if you extend it, this low also, when it's coming down, it needs to be taken out. It tells us that our trend is still active. We're still in an active trend, okay? Now, what if we had something like this? Instead of us having this low taken out, then we have something like this high taken out. Now, once something like this happens, it means that we have a change in character. Our market structure has shifted. So on occasions like that, what we need is we need price to now come back here, either here or somewhere here. We need this previous high to be protected and price giving us another high. Once it does this, then it is confirmed that we have completely changed. Our market structure has not shifted alone; it has changed. We have a change of character, and price is now towards the upside. So we should be expecting higher highs, higher lows, higher highs, higher lows, right? So we want to always know our current market structure. Our current market structure. I will advise doing it on a 4-hour time frame, but irrespective of your time frame, I think you can still achieve this. All right. I don't want to clear everything now. Irrespective of you can still achieve this. Now, what we had recently was price now was in a range. In a range means it is not clear if it wants to continue this downward movement or we want to have a change in character. Price wants to change to the upside. Okay. It's not clear yet if price wants to change to the upside because we have a low, we have a high, we have a low, we have a high. So it was ranging. Price is not taking out anymore. But what do you notice here? Price recently just took out this previous high here. It took it out. And when it's coming back, this high is being protected over here. It means that there's a possibility that price is now trying to move towards the upside. So sooner or later, this is the recent high that we have. I need price breaking above this particular high. I need price breaking above this particular high in future. I need it, right? So this is what we are supposed to be expecting now. So on USD CHF, I'm expecting price to still move to the upside. Now, the challenge we now have is where are we going to? And when price is supposed to move to the upside, you obviously want to be buying the market, not selling the market, right? Selling it is possible, but it is dangerous. Buying the market is most effective when our market structure is giving us series of higher highs, right? So this is what we need to do now. Now we need to look for where we can enter our buy from. Now we can do that in different ways. There are so many ways that it can be done. One of which we can use our Fibonacci retracement. So for instance, when price went to this high, so I take my Fib from the swing low all the way to swing high. Now what I'm doing is I'm waiting for price to come to a discounted level for me to what Fib does for you, it helps you to know from the swing high to the swing low within that one price has come more than 50%. So if you remember the higher the prices, the higher the quantity demanded. So the lower price goes, it is becoming cheaper and cheaper. Now these are 50% retracement level. Anything below 50% price has become cheap. This is our discount zone. And anything above 50%, 50% retracement level, price is still high. It is in premium, right? Now, obviously, I like taking in between my 50 is can you guys still hear me well? Can you still hear me perfectly well? I think somebody is complaining the voice is cracking also. I need to confirm if you can hear me well. So we'll just quickly fire down. Time is not really on our side. Loud and clear. Thank you. You are Mr. Felix. All right, good. So now this is what I need to see, but I need price as much as is in my discounted zone. Is it cracking again? Let's see. Maybe you check your device because I think for the vast majority, they are good. All right. So now I need in between my 50 and my 61.8 retracement levels are those levels where I prefer taking my trades from. Those are the levels I prefer buying. If I'm sure that, okay, market structure has shifted to the upside, I have a higher low and a higher high now. So I draw my Fib from the swing low to the swing high. I expect price to tap in between from my, I don't just want to buy from 50. I need it in between 50 and 60 if price can get to that level. So obviously price got to that level, took my buy, and you can see after waiting for a while, price is obviously moving again to the upside. Now, as it's moving to the upside, right, what I need is I need price to move and take out this previous high. I need price to take out this previous high. Once it takes out this previous high, then I will draw my fib level again from the low, this swing low, to the next swing high. You know, I keep continue following that particular trend. But one of the ones I prefer most is I look out for my demand area. I look out for my demand area. Let me take out this fib. If price is going to the upside, definitely there's more demand pressure, right? So I look out for areas where I have good demand, okay? And demand and supply trading strategy is one of my most preferred trading strategy. It wins most of the time. Like a lot of times, using demand and supply to trade is like a winner for me. All right. So how do I recognize this particular level for my demand and supply? Now, obviously, I want to see price push to the upside. You know, to the upside. Now, there are three characters I want to see. There are three characters I need to recognize based on my candlesticks. Based on how the candle is, will tell me if it's a demand level or not. For instance, this candle you see here, this massive bullish candle here, it's what we call an explosive candle. An explosive candle is that kind of candle that the body of the candle compared to the total range, the range inclusive of the low and the high, right? The low and the high. When you calculate the body of the candle compared to the low and the high, it covers more than 70% of the body of the candle, the range. Covers more than 70%. This is an explosive candle. This also is an explosive candle. The body of the candle covers more than 50%. Now, you can check, you have series of them. You can also have this as an explosive candle, this as an explosive candle. Now, another kind of candle we have is a decisive candle. A decisive candle is one whereby the body of the candle covers at least 50% of the total range of the candle. 50%. This one covers at least 50% of the total range. So this is a decisive candle, decisive candle, decisive candle, right? Then the last one is an indecisive candle, whereby the body of the candle covers less than 50% of the total range, inclusive of the high and low. So you have so many indecisive candles here, so many. Now, in context, when you have a candle like, let me look at it. Okay, what of this candle here or this candle here? Now, obviously, the body covers more than 50%, but the problem is that in context, this candle is a very small candle. So it is still an indecisive candle. It's a very small one. So I need to see a price pull up to the upside massively. Once price does that, it gives me a clue that level should be a demand level. There was so much buying at that level. So I look at for the candle preceding that one, which is this, the candle preceding the one that started that move. Okay. Now, most times I prefer to see three explosive or decisive candles moving consistently. No, nothing in between. Just going to the upside, right? I prefer. But in context, this one candle alone covers like three explosive candles for me. So the candle preceding it, I mark the high and the low, then I extend to the future. This is my demand zone. This is where I have much more liquidity. It means that this place needs to be protected. What do I mean? When price returns here, price is cheap, right? Yeah, Muji, yeah. It looks like a manipulation candle, institution, things like that. And it is the institution that causes when that institution, that is where we want to be buying in the future. They obviously cannot buy all at once. They cannot buy all at once. So they buy in batches. So they will buy first, then they allow price to become cheap again. Now, imagine that here was 1,000. I bought at $1,000. Price went as far as 1,500. Now, I wouldn't want price to go below $1,000. I would protect this $1,000 again. So that's what they are trying to do. So price, the lowest it should go is this level here, right? This level here. Now, because there are times where if I use my FIB alone, price might go below my FIB levels, my 50 and 61%, and can tap into this place, especially if it is the first time I'm seeing a massive move like this, right? So once price taps into this level, then we are expecting a massive buy. Now, alternatively, if price fails to break this previous high here, it means that there is not enough liquidity in the market. There's not enough money. All right. Sellers are not enough. Whatever you buy, you are not finding enough to sell to you. Isn't so I need price to sell more first. I need more sellers in the market first. And more sellers in the market indicates that price needs to come down. Right? So when sellers are more in the market, price needs to come down. I want to buy massively. Imagine that I want to buy 20 billion worth of dollars. I have Naira and I need to buy 20, convert my 20 billion Naira into dollars. Obviously, I might not find enough dollars in the market at that point in order to convert my Naira to my dollars. So I can be doing it in batches, right? So what I want is I will need the dollar guys to gather together. I will need a conglomeration of dollar guys, a lot of them putting heads together, right? So sellers, enough sellers to come into the market so that I will have enough of what I want to buy. So when price cannot break above the previous high, it means there is not enough liquidity. There's not enough power for price to force its way to the upside. Hence, price will most likely come back down to the previous level where it started that massive move from, all right, the candle preceding it. So once it can do this again, then we are going to be massively buying this guy. As much as this market structure has shifted to the upside, I want to be buying. I cannot just place my buy anywhere. I want to be buying at a point where I have the highest probability of winning my trades, okay? So if price starts back into this level, you want to be taking your buy. And trust me, if this instance, if you buy and you say I'm buying resistance, and price obviously breaks resistance and keep going to the upside, and obviously you are taken out of the market, right? So in price shifting to the upside, I'm not interested in sells, I'm only interested in buys, and I will most likely want to be buying at this level here. Don't forget that, like I said, the first one is my swing low to my swing high for my FIB levels. And my FIB levels should be able to give me my discount levels. And I always want to buy when price is already cheap. Okay. So I wasn't surprised for price going up from this level. But for the fact that price is not getting to this level and taking it out, is coming back down, then I obviously want to be interested in where my demand level is. So the combination of my demand and my FIB should be able to give me winning trades, all right? Winning trades. So this is what I'm expecting. I'm expecting a further downward movement for USD CHF all the way back down. It can start again from my 50 and 61, or most likely get to my demand level here before rallying back to the upside. So that's for USD CHF. Now let's apply the same principle to USD JPY before we move to gold and the likes. So if you look at USD JPY, you obviously see that our market structure is towards the upside. Quickly recap with it when price was giving us a downward. Okay, look at it. So when price was giving us a downward movement, you know, series of highs, we had this lower high. Okay, let me see. This one is, if it gets to the demand level, is that not a change of character? No, sir, it is not a change of character. Now, this is a very, very, very good question. So please permit. Uh, Let me just go back, Adewale, to your question. All right. Where's the USDC chef again? Now, yes. So change of character. So that means it's not yet a change of character because, or let me see your question again. So if it gets to the demand level, is that not change of character? No. If it gets there, no. This is my swing low. This is my swing low. Let me take this out. This is my swing low, and this is the swing high. This was the low that sponsored this high, that took out this previous high, right? Good. So if you notice, my demand most likely should be inside of that massive to the side. And like it can be at any points from the swing low to the swing high. I need to look at my demand. Obviously, my demand is slightly above swing. So it is not yet a change of character. All right. It's not yet a change of character. All right. So back to our USD CHF. Sorry, USD JPY rather. Now swing low, swing high, swing low. Okay. Swing high, swing low, swing high, swing low. Now we had all of this until price came to this low here. Until price came to this low over here. Now from this high. Now we can have a massive high. Let's say from this high. This high sponsored this low. Okay. So from this high, all we're having down. Now, what we're expecting is that price should sell more here, come down, and take out this particular low. That was what we still expect. So we're looking out for sell. Now it got to this level, we sold again, but the problem was that price is not taking out this low to the downside. But what we noticed was that price now went to the upside and took out this high. This previous high here, it took it out at this point. Now, when price takes out the high, we need this place here where price took out previous high to be protected. We need it to be protected. All right. Now, where is the low? High. This was where the low is. But let me not confuse you. From here, this high to this low, your trading is inside of this range. Whatever you are doing is from this high to this low. All right. So it means that from here to here, if price is going up, I'm looking for opportunities to enter a sell again, right? Now, obviously, price did not sell for me. It did not sell for me. It did not sell for me. Instead, it took out this my high at this point. Now, once it does, it means that there's a change in character, right? So what I need to do is I come to the low. This was the low that sponsored this high that I have here now. Okay? That's the low that sponsored this high. It means that this low that I have here, if price really wants to hold its own, it needs to be protected, which obviously was protected at this level. So then it is confirmed that we now have, we are to the upside. And you can obviously see from there, price kept going and kept going and kept going till this very moment right here. So now, all things being equal, we are still actively to the upside. Okay. So what do we expect for USD JPY? It's quite similar to USD CHF. I don't know if the chart looks similar to like the current market price. It looks similar. I have a low here that gave me this high over here. Can I have a yeah, this massive candle is a signature, right? It's a signature. So the candles preceding. Now I have multiple candles now, multiple indecisive candles. like multiple indecisive candles, right? So I can decide to take this one, or I can decide to take all these indecisive candles here. Either way, it still works. They still qualify, right? For me. So I can take all of them and do it right here. Now, somebody can be asking, "Why not is support level? A demand level potentially will become your support level in future. But for you to say somewhere is a support, it means that you are probably seeing price bounce off it more than once before, right? So I don't need price to bounce off before I know that it's a demand level. The signature move to the upside tells me if it's a demand level or not. So hence, I am very confident in buying when price returns. Why? Because I've not seen price retest this level again. And obviously, price is struggling to rally back to the upside. So I am most likely expecting price. For price to have enough momentum to push up, it needs to first of all come down before pushing up again to the upside. And it's not that close to that level. So that's what I'm expecting. Perhaps was FOMC, or if FOMC brings price all the way here, then we're going to be buying. Or CPI brings price here, that we're going to be buying from here. Now, our goal is here. Okay, different, differently rather. So this was a low that sponsored this high. Now, but when it comes to gold, let me just give you this info for free now. When it comes to gold, right, I would prefer taking significant highs and lows, significant highs and lows. Now I'm said check US 100, check Euro CHF, JPUSD, and the likes of them. Now, my aim is that if you actually follow this particular review, if you follow the review, my aim is you will be able to understand what you need to do on all those instruments, what to expect. If you really follow the review, you should be able to tell what to expect from prices, all right? Because most times I like to take my time. And if I keep going this way, I will hardly have time to check other instruments. I just don't want to say, oh, okay, gold, we are buying, or oh, we are selling. Buy here, sell here. No. I prefer to actually show you what price is doing, tell you why price is doing it, and what you expect price to do given the current situation. All right. So let's see if we can try and check those ones, but at least let me just try giving you this knowledge over here. All right. Now, for gold, I said I will prefer significant highs and significant lows, not the in between. Gold does a lot of confused move in between, right? So, for instance, this was a low that gave me this significant rise. Now, it did not just give me a significant move to the downside. So, I will still assume my high is continuing. So, from this low here all the way to this high, that's what I'm going to be doing. That's what I mean significant. Because if I say from this low to this high, then from this high back to this low, it is too choppy in between. All right. Gold can make some crazy moves inside this thing and it will just take you out. So I'll prefer significant moves. All right. Now, what do you see? From my swing low to my swing high, I need, okay, sorry, this is the swing high. This is where it now gave me that swing high that I am now seeing some significant retracement to the downside. Okay. So inside here, from swing low to swing high, once price is doing this, it does not mean it has changed character. It does not mean. It doesn't mean it has changed character. Until price, until it takes it out. Takes it out, and I need this low to be protected. Once it's protected and I see another move to the downside, then obviously we can start doing business. All right. So what do we notice? Inside here and here, do you have a strong demand area? All right, that you can possibly want to continue buying that particular move again. As much as I do have a demand area, but not a very strong one. I see this decisive. Now, this one I don't is indecisive, then decisive, explosive to the upside. So this one now makes this level slightly weak. This one also makes it slightly weak. I need consistent explosive on this side. Now, if I'm taking this as a demand level, I will be considering it as not a very strong one, but at least a good one. So now, which candle precede this move? This bearish candle here was the one that started, was the one before the one that started the move. So from the high all the way to the low and to the future. Now, remember I told you that your demand level is potentially going to become your support in future, right? Now, notice that it took a few days, but when price got there, what did you notice? Another rally to the upside, okay? Another rally to the upside. I think I have some questions here. I've zoomed in. Emmanuel, if I zoom in, I like seeing a larger picture. That's the problem. You can't see clearly. Wow. Okay. All right. So this level here, I got it from my demand area here. I noticed my demand area, which I identified. I waited for price. When price tapped in there, I buy. You can tell it's definitely what the weight. So I make my massive profit. Now, for the fact that price has not come back to this high to take it out and continue giving me another higher high, it means that potentially price does not have enough momentum to go high, and it will need to come back to my demand area here again to come and look for more liquidity. It came back again. The moment it tapped, went up, but still couldn't go get, not even breaking. It couldn't even get here. Now it did it again. Now, the more it does, the lower, the less that push to the upside is. It tells you that there is a tendency you can have a market structure shift, right? There's a tendency. Now, that's where situations where you still start seeing good range. Now, you can obviously see that this is a range, okay? Now, inside that range, price is telling you something, but the problem is you don't really understand what price is telling you because the range will not last forever. If it was that price was moving close to this level here, close to this level here, close to this level here, then I'm just saying, okay, potentially price can break above it and continue that my upward movement. But price is giving me less high, less high, less high, less high. And you could see that yesterday it clearly took out my demand zone here. And I need this, my low that sponsored this high to be protected. Remember my statements, right? So, and price went back. Now you can see that there's some form of protection at this level here. Okay, but I now have a swing high. So if I'm potentially looking at this as a downward movement, I now have a swing high, and I potentially have a swing low also. And I potentially have a swing low also. All right. So what do I expect? I expect price, if this is now a confirmed market structure shift, to break above this particular one to the downside. All right. So for gold, we are looking at the possibility of more push to the downside, more push to the downside for gold. All right. So given that this level will hold, and on the other hand, worst case scenario is that price do enough retracement. So in this scenario, I can look out for my entry points a number of ways. I can apply my fib. Now, since I'm looking out for sell, my fib will be from swing high all the way to swing low. Then I wait for price to get into my 50 and my 61% retracement level. It has not done that yet, so I'm not in a selling position. That is when price can get into this level here. Price can get into this level here, then I'm looking out for a sell to the downside. And when price was moving down, it created the signature supply move. The opposite of your demand is your supply, right? The opposite of your demand is your supply. Let me take this out. Sorry. Now, what do I mean by supply? Remember the characters of our candles, right? So I have this candle here, I have another decisive candle, I have an explosive candle, I have a massive candle to the downside. Now, this obviously is a supply area for me, the opposite of my demand. Now, which candle precedes the candle that started this move is this bullish one here. So I'm going to have something like this from the low all the way to the candle high. Aha. So this is my supply area. So worst case scenario, price goes all the way here, then obviously you now see a massive dumping, massive dumping. So in reality, you feel this level should hold, right? This level. So your previous support should potentially become your resistance. Now, on the condition that there is enough liquidity at that level for price to really use to sell from there. If there is not enough liquidity, then price goes to where there's liquidity. The summary of the price movement is price move from demand to supply, from supply to demand, from demand to supply. And what is doing that, as it's moving to those levels, is looking for enough commodities. If you want to demand for something, then obviously there should be enough sellers to sell to meet your demand level. And if you want to sell something, there should be enough persons willing to buy what you want to sell, which we call liquidity. So if price gets to a particular level and there's no liquidity, it continues to the next level until it gets enough liquidity. All right. So that is what I'm expecting for gold. For, you can pick your sell entry. You can just pick your sell entry. If you don't want to be patient, but if you want to be patient, then allow price back into this level or highest this level for us to continue our push to the downside. All right. So that is for gold. So far, we've not had any entry to just enter the market all at once. So let me look at US 100 quickly. US 100. Okay. So let's do the same thing we have been doing. Let's do it to US 100. You can see that there's possibly change of character also in the US 100. Now I'm combining two things here: market structure and demand supply. Market structure, demand and supply. I just added few ones to look for my entry points. Market structure, demand, supply. That is the strategy I'm using to take this market review today. And coincidentally, we are going to be having this same demand and supply trading in the Abuja office today. So for those who can join physically, I will encourage you to come by 11 a.m. It's going to be very, very educative, looking out for possible entries. I'm just going to be exposing you to the, all you've been doing wrong. You don't really understand your chart. You understand the charts. In reality, you really don't. All right. Hence, if you do, you will not be having those series of losses you've been having. You won't be. So this is going to be helping to avoid those losses. All right, helping you to take the trade in the right direction. So cases where, oh, you place your buy, all of a sudden price is going down. I bought and price started going down. After I've seen price going up, I now say, okay, let me continue buying. Price started going down. Or price was going down, going down. I said, okay, it's going down. Let me just sell. Then all of a sudden price starts going up. Because you don't really understand. You are just you are being myopic at that point with your trading. Understand what your chart is telling you. Understand if the market is currently in a demand level or currently supplying to the downside, right? Mr. Mani, I guess others can see clearly because you are the only one complaining about seeing clearly. As much as I like to zoom my chart, it won't give me that room to explain what I want to explain, right? It won't give me that room to explain what I need to explain. So US 100, I have over here, price was actively, massively pushing to the upside, massively pushing to the upside. So I have a low right here, a low right here, that gave me this particular high. Okay, so now anything in between here is just me looking for entry points to buy. Okay, looking for entry points to buy. And at this point, sorry, where is that level? Okay, this is the level for me. All right, so this level here, which is my low. So all my trading is going to be inside of this particular range. here, all the way here. Okay. Now I can extend it into the future. So anything inside here, I'm looking for possibility to buy the market again. All right. Possibility to buy the market again. Now, if you look out for your demand inside this level here, now let's even say arguably, I need consistent push. Now, this is an explosive candle that started this move. You know, this one is an indecisive candle. I can never consider an indecisive. Explosive, indecisive, explosive, decisive, decisive, explosive. All right. So if I take this as my demand level over here, and I mark this, the candle preceding the one that started the move, which is this. Sometimes it can be bullish, sometimes it can be bearish. I mark the high and the low. Now, what do you notice? Now, what do you notice? Sorry, I need to go back. Okay, so after marking that level now, you notice that when price came back the following day, it tapped into that level and you can see some buying. So I would already be waiting for a buy at that level and obviously make some profit, right? Now, there was a problem. Price could not continue high to go and break this high and continue giving me upward movement. So price kept testing this my demand level, just the way it was doing on gold, kept testing. Now it's starting to, liquidity break, sweep run. All of a sudden, I have this level taken out here, right? So that level, in the future, I need that level to hold for me. Now this level here, but remember that this is my swing low, right? But my swing low has not been taken out. It tested my swing low. Now it took out my low at this point, took out my low at this point here, right? Now, remember where we are coming from. The beginning of that massive move to the downside, does it create a supply level for me when price, that move that broke this my low that I was protecting here, this move that broke it started from here, right? Good. So my demand is invalidated because it has been broken now here and here. Now, which candle precede it? Which candle precede this particular move? Now, I'm going to be considering this one because in between this one, I have an indecisive candle. Let me see so that you can see clearly. Now, this one should have been the one that started, but there was an indecisive candle in between, which invalidated it straight. Okay. But this one now started it, which means this candle preceded that move. So I mark the high and the low of that candle. And I bring it here. Now, notice that price somehow, apart from the fact, so if I'm only interested in the fact that this low, so somebody might say, okay, for the fact that price went back inside here, we are back in an uptrend. Not necessary. No. Consider the low first to the high. If price is failing to break the high and continue, instead it's reaching back to the low, market structure is shifting. When it breaks the low, the move that started that broke that low, does it create supply? Not every of those moves can create supply. This one obviously did. Explosive, all right? Those are the kind of candle we want. Mark the one that started the move, that preceded the move, which we marked right here. Now, notice that price came back into this our level here. So my new level now is from this swing high all the way to this swing low. Anything in between is inconsequential to me. I am only looking for opportunity to sell from in between here and this swing low here. This downside, because my market structure shifted from this level here, right? So it shifted here. Now I need this low to be protected, or worst case scenario, where the move started from. So this is my whole trading zone from here all the way to this level right here. Now notice that price went back, was testing here, went back to my main level, gave me some good sell. Now the problem also is price is not breaking below this my previous low. Is it that price want to change character again, right? So because that is what we usually check. And as it's coming to the low, it's getting higher and higher and higher again. So is it that it doesn't want? But for now, we are going to be looking out for a bearish move on our US 100. So price favor more to the downside. If I thought it's going to break here, I don't think it's going to break it right now. Okay. So we are looking at a further push to the downside. If at all it wants to change structure again. So that's for US 100. Unfortunately, I cannot take more because I need to uh, go do something else. I have a meeting starting 9 already. So this is past 9. Um, wow. Mm, the training is only physical. But I can see a way where we can try and do a virtual one. It's a physical training. So please, kindly attend those training. And I think we have series of training. Please contact your account managers. They are going to be giving you a breakdown of all our events, the remaining events that we're going to be having for this week. So for Abuja, 11 a.m. I'm expecting you at the office. I'm going to be at our office here. I'm going to be telling you the secret trading of demand and supply. It wins. It wins. It's not 100%, but it has an 80% win rate for your trade. More than an 80% win rate for your trade. All right. So at IU, I'm going to get that stuff across to you. Sorry, my network has been so bad. I think I had to provide an alternative network to be able to do this today, right? So looking forward to seeing you, right? Thank you very much. I'm sorry I can't share everything. Yes, it's only for VIPs, except you want to be a VIP, then you can come and attend. If you are willing to becoming a VIP, then obviously you can come, all right? The number here it is 002658243. The name is Victor, or they call me Bishop. Mm, right. So this is my number here. My name is Victor. You can call me Bishop also, Bishop too. So I'll see you later, or looking forward to hearing from you. Please contact your account managers to give you a breakdown of all of our other events, right? Thank you so much. Sorry I cannot take the rest of your analysis, but I hope what I've shown you here is very, very useful, has been useful, right? Bye-bye. To becoming a VIP, I think your minimum balance should be up to nothing less than your minimum balance should be nothing less than 1 million in Naira.